Here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally. And what a week it's been, and I'm still recovering from Super Thursday yesterday. Coming up, what to make of the coal market and what that means for Australia. We'll have the latest analysis from Mackenzie coal analyst Griffin, and our exclusive interview with the new CEO of First State Super, which was one of the Climate Action 100 Plus group that pressured Glencore on coal. The big whales are falling away from the Australian shores again, and the casinos are making a dent in the profits for Star Entertainment. We talk through the results with Chief Executive Matt Bekier in just a moment. The market seemed to think it was OK. And the young Australian driving Uber's global policy, Amit Singh, talks ride-sharing, Australia-India dialogue, and hopefully his time looking after Bill Shorten. Well, the big news splashed across our papers this morning. China slapping a ban on our coal exports, with reports that the port of Dalian and 4 other harbour ports close by had banned imports. There's a go slow at other ports. Coal, love it or hate it, is still Australia's largest export and very important to the economy. So when the Governor of the Reserve Bank, Philip Lowe, hopped up at Senate estimates today, he was just the fellow to ask about how damaging he thought the development was. Answer, not much at this stage.
One interpretation of what's going on, this is a way of controlling Chinese steel production. Another possible interpretation is that the Chinese coal industry is not particularly profitable at the moment, and containing imports might boost the domestic prices and help the Chinese coal industry. So that would be kind of another interpretation of what's going on. It's really to do with environmental protection and the Chinese coal industries.
Both the Prime Minister and the Treasurer were downplaying the developments as well. Take a look.
There is no evidence before me or us that would suggest that it has the connotations that it has anything to do with anything more broadly than that. This happens from time to time, and we just work constructively with our partners in China about those issues. So what we are engaged with, as indeed New Zealand is just pursuing a constructive relationship with China, a very constructive relationship with China. Our coal exports remain our single largest mineral export in Australia. It supports 55,000 jobs in Australia, right across our economy. And our government is certainly in favour of being able to continue to engage in our minerals resource industry to ensure it flourishes, and we would certainly think that if there was any weakening in that market, I certainly wouldn't think it was wonderful. I would think it would be a very serious impact on the Australian economy.
Now, of course, there is any amount of speculation around whether the action by China goes beyond those climate change concerns or looking after the domestic market, specifically the anger in the Middle Kingdom over how the West is treating Huawei over 5G. Now, the Huawei founder came out fighting a few days ago, didn't he, promising that the business would succeed despite the bans from the West because its technology was just far superior. There may be a grain of truth in that too, as I've mentioned before. The Huawei stoush is not just a national security issue, clearly. Things have got muddier because plans to make sure the Five Eyes security group of nations hold the line is still shaky. While the US, Australia and New Zealand have banned Huawei from 5G, 3 days ago Britain announced that Huawei could take some part in the 5G build. Canada is still sitting on the fence as we talk. There are reports this week that Chinese tourists are on a go-slow to New Zealand, and tourism, of course, is very important to the Kiwis. So why not deliver a shot over the bows with a coal export ban to Australia too? Very complicated, very nuances, trade, and a long game with, of course, the backdrop of the US-China trade war underway. Meanwhile, resources miner and trading giant Glencore was under a different sort of pressure this week on coal and buckled, announcing it would freeze production of coal at current levels. As my colleague Paul Garvey at The Australian astutely pointed out, that may suit Glencore, actually, famous for cornering the market in different commodities. But there's no doubt that pressure from this new group, Climate Action 100 Plus, a powerful new investor grouping with billions under management, pressured Glencore's hand. Among the group are Aussie industry funds like First State Super, and in a little while we'll hear from CEO Deanne Stewart on why she supported it. Well, let's go to some of the results this week, and very importantly, Star Entertainment we haven't picked up on. Now, they delivered their results yesterday, and we hear reports of this exodus of high rollers that delivered a bit of a hit to the company's fortune. Star's half-year profit falling 2.4% to $123.8 million. Turnover from high-stakes gamblers, or so-called international VIPs, plunged 33% to $20.7 billion. VIP turnover at the biggest casino, the Star in Sydney, plunged by 49%. Now, it comes after rival Crown Resorts told investors earlier this week that it had suffered a steep drop in spending from Chinese high rollers. Analysts point to Chinese softening economy, which has ground to the slowest growth in nearly 3 decades. Star Entertainment declared an interim dividend of 10.5 cents per share, up from the 7.5 cents declared a year earlier. Well, for more, delighted to say, Star Entertainment CEO Matt Bekier is actually joining me live at the desk. Matt, very interesting. Obviously, the market quite liked this. We do get very focused on these high rollers, don't we?
Yeah. So for us, the high roller business is only about 15% of our earnings.
Yeah.
But 150% of the attention. So I just need you and your viewers to keep that a little bit in perspective.
So you're shrugging off in your classic Swiss-German way that this really is no problem at all?
Look, our VIP performance, the international business, was actually pretty good, to be honest. What impacted us was that we were really lucky. So last year we were unlucky, and so players were around for a long time. That inflates turnover. Yeah. This time around, we were really lucky.
The bank?
The bank, the house.
Yes.
La banque. On a gagné.
Oui.
And so we took the money much more quickly. That, of course, pushed down the turnover.
Yeah.
But from a statutory point of view, if you look at the cash that we have in the bank,
yes,
we had an absolute record year, and the dividends that you saw had a lot to do with
reflect that. So, I mean, it's quite difficult for people coming to this business for the first time, because your normalised profit just takes out that win rate because it is so influential, isn't it, on the numbers?
It is, absolutely.
All right.
But, you know, so those are just some of the mechanics. But I think the market gave us a big bump because of the domestic result.
But just still on those high roads, one of the reasons perhaps they weren't around for as long was because, as you say, they didn't win as much, and so they didn't stick around for as long.
Right.
Did it mean that the traffic of the high rollers was also down as well?
No. So we had actually 10% more than we had in the previous year.
Yeah.
The mix is changing a little bit, so we're getting more customers that look like high-end tourism customers for whom gaming is part of the experience, but not all of it.
But this is all part of your diversification strategy, isn't it, to shift to more hotels and
a more sustainable, repeatable business. Yeah. Be less dependent on a few players.
So the market also looked at the 85%, and which is your domestic business, which is, tables,
slots,
slots,
food and beverage, bars, restaurants, entertainment, hotels.
And that went?
That went really well. So our domestic gaming numbers are up 6-7%. We gained market share in every segment, in every market. And, the market's looking at that and saying that's pretty solid.
And people always talk about Crown being your main competitor. I mean, did you get market share from Crown, or is it hard to say?
No. But the Australian gaming market is fascinating. It's one of the deepest gaming markets in the world. Australians spend more money gambling than any nation in the world, other than Hong Kong. But 80% of that is not in the casinos. Casinos is only 20%. The rest is all largely in pubs and clubs. So most of the market share gain came from there.
Right. OK, that's very interesting. Tell me a little bit more about how your investments are going, particularly your investments in the Gold Coast and in Brisbane, because that was a huge spend, wasn't it?
Well, we're still going through Brisbane. So Brisbane, as you know, we're building Queen's Wharf, 1,100 hotel rooms, 4 hotels.
What was the capex on that?
$2.4 billion.
Yeah. Still running to schedule?
Still running to schedule, still running on budget. We'll be updating the market in a couple of months on some of the bigger contracts that we've led at a fixed price, so we're feeling good about that.
Yes.
Gold Coast, we completed 12 months ago a high-end suite, all-suite hotel with integrated gaming facilities.
Are you seeing a difference in terms
Yes.
of what's, people coming and visiting?
Absolutely, and so that's been a big success for us. And so, if I come back to the VIP business, Gold Coast is now the third largest destination, has overtaken Perth as a destination for VIPs from a standing start. So we're really happy with the performance, and it's a great property, probably the best location right now in Australia, because it's the freshest and it's a unique proposition.
What's happening at Stardown in Sydney? Because you've got some sort of transitional VIP room, hot room.
Yeah. While we're building out the more permanent facility,
Yeah.
that has gone exceptionally well. So,
Notwithstanding a bit of carping from the sides.
to some extent, that might have been helpful because our customers' expectations were pretty low, and then they walked in and go, "Oh, this is a lot better than what we had before."
Yeah.
And arguably, I would say objectively, it's a much better proposition. So, and I think it builds the anticipation of how good the permanent solution is going to be. We're also still in planning to go and develop the Ritz-Carlton Hotel.
Yes.
I think that project team has now turned 4 years old, and we're still waiting for a determination.
And meanwhile, your competitors are sort of wrestling away with Barangaroo. How do you think that's going to impact you once that's up and running?
Well, that will change the dynamics in the Sydney market when they open up, absolutely.
Yeah, which is one of the reasons I guess you're investing so heavily in.
Yeah, and we're building our customer service, we're building out our teams that look after those high-end guests.
Yeah.
So it's more than just a physical build.
Yeah.
There's a lot more that goes into
Matt,
that.
online, what does that do for you?
Look, online gambling for cash, other than betting, is illegal in this country.
Right.
It's also entirely unpoliced. So if you want to hop onto your computer right now, you can spend as much money as you want online gambling. So it's rampant, it's everywhere, and it's always been that way. We obviously, as a licensed operator, don't do that.
So, but it doesn't noticeably eat into your market.
It's hard to say because it's always been there.
Yeah.
So I think our regulators have always sort of put their hands in their heads in the sand and just say didn't want to look at it. But there's probably over $1 billion worth of gaming revenue that is being gambled as we speak online, totally legally.
China's obviously so important for you. We've just been hearing about this ban potentially tied up with political things or in the coal market. I noticed that New Zealand, there's talk of Chinese tourists not going to New Zealand because of the Huawei issue there. Have you seen anything at all?
Well, you're seeing the inbound tourism into Australia from China slowing down as well. It's still growing, but at a slower rate than before.
But do you think there's any political edge to that?
Well, there has been in the past. I think we just have to watch this space. Having said that, the long-term fundamentals are fantastic. Only 10% of the Chinese have passports. There's decades of growth in front of us.
Yes.
But it can be bumpy.
Yeah. So, as an investor, looking forward, your guidance and where's the growth going to come from?
Look, the growth will come from the same sources that we've demonstrated that we're getting it from now. Domestic, I think we have a lot more in the tank. We've got great initiatives, great assets coming on stream. Longer term, it's tourism. For us, a lot of what we're doing, 80% of our capital investment, it goes into hotel rooms, food and beverage, and that's really to bring tourists to our sites.
You've really focused on Queensland. Is there anywhere else in Australia you'd look to go to?
I'd love to build the Ritz-Carlton in Sydney.
You'd love to build the Ritz-Carlton in Sydney?
Been in planning for a few years, so I'd love to get
What are the blockages there?
Planning.
Yes, but is that depending on who's in government, or what is it? We've got an election coming up.
We do have an election coming up. That probably doesn't help.
Right.
But,
yeah. What about the federal election as well? I mean, to what extent does that impact on...
It does make people a bit more nervous. So I've been in this game for over a decade now, and you see that every time we have elections, there's a bit of uncertainty. But as soon as it almost doesn't matter who's in power, as soon as that uncertainty goes away, the market returns. And
what about the sort of soft consumer spend that people are, when we're hearing from, say, Brad Banducci at Woolworths, not from, though, Alan Joyce at Qantas. And we're hearing that people aren't buying French champagne, but they're still booking airline tickets. Are they still gambling?
They're still gambling. And if you look at our numbers and you look at our trading update, the same strong trends that we had in the first half continue on into the second half. So I think we're in a very deep category, so we may just be shifting more share.
And dividends, you've upped the dividend. So
Yep.
is that going to be, more of the same to come?
Yes. So the board last year, we raised money by placing it with our partners out of Hong Kong.
Yes.
That has strengthened the balance sheet. That now gives us the opportunity to reward investors, through the term of the investment, and not just wait till all of our big investments are completed. So our policy says that we will pay out 70% of profits.
Well, I'd like to thank you so much for coming in.
Thank you, Ticky.
Bekier.
Good to see
It's been
you.
great to talk. Thanks very
Same
much.
here. Thank you.
OK, after the break, one of the delegates representing Australia at the Australia and India Youth Dialogue, head of global public policy at Uber, Amit Singh, next.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. Now, the best and the brightest emerging young leaders from India and Australia have gathered in Melbourne and Sydney this week for a major bilateral dialogue. One of the delegates this year is Amit Singh, who has risen to be head of global public policy around the future of work at Uber. He's also a former advisor to Kevin Rudd and Bill Shorten. He joins me now. Amit, welcome. You've just come from the dialogue. Now, we talk about India. We have done on this show a reasonable amount, but just this news about coal and China shows how many eggs we have in the Chinese basket, and just India is behind, isn't it, in terms of our relationship?
That's true. I think what's really interesting is that Peter Varghese did a really seminal study on the Indian future economic relationship, and one of the core lines in it is it says contrasting India to China actually lets you miss the opportunities that you have from India, right? I think the truth is that we don't, we have a very broad relationship, but we don't have a deep relationship.
So that Varghese report, it was always a white paper, I think it wasn't, it was early last year.
Yes, that's right.
What's happened since then?
So the really interesting thing about the report is that the report talks about moving from strategy to delivery, right? Moving from, we know how to size the potential of the Indian market, right? Yes. It is the third largest, it is the third fastest growing economy in the world. Sorry, it's the third largest economy in the world. It's one of the fastest growing economies, fastest large economies in the world. It's the second largest economy by population, and it is the largest democracy. We know, for example,
and it's huge in tech and digital.
And it's huge in tech and digital. We know, for example, that we can do a lot more. Two-way investment in between Australia and India is about $30 billion. $30 billion is a pretty low number, given that it's about 50 times smaller than two-way investment with the United States. We can do a lot more. We have a lot in common. We have the people talk about the 3 C's. We have cricket, Commonwealth, and we have curry.
Yes.
But I think what we really need to do a lot more of is connection. You know, I mean, and that's what the dialogue is about.
People say, certainly looking at investments in India and doing business in India, that it is tricky on the ground, but there is progress being made. For example, we now do have bankruptcy laws in India, don't we? I mean, that made a big difference, I think, as I understand it.
That's true. I think that there has been progress, but I think what we've really realised, I think, through the youth dialogue, the Australia-India Youth Dialogue, which is on this week, is actually it's about the people-to-people links, right? Like, it's been pretty amazing to be around a whole bunch of people that do really quite fantastic things.
And have you met some really interesting people on both sides, and you could really see some bonds happening? Yeah,
and I think what we've also realised is that the depth of that relationship goes beyond what we think of the traditional features, right? So, for example, they're delegates at these things that do surfing in India, right? Yeah. They're trying to promote surfing in India. There's a group of people that are trying to build a business around allowing impoverished women to get into the jewellery trade and sell it in Australia. There's also Australians trying to build changemaker networks for school kids in India to be able to get school kids involved in the actual reform process.
Can these, I mean, here you are, global head of policy at Uber, can any of these ideas scale up? Because that's really what's needed, isn't it?
That's right. I think what's really interesting is that we have tried to run the India relationship, at least as Australians, from a top-down approach. We've basically relied a lot on governments to do the work. We've relied a lot on big business to do this, right? And I think what we've realised as kids, this is the 8th iteration of the Australia-India Youth Dialogue. What we've realised is that young people can be part of this conversation as well. It's startups that are going to drive these things. It's social innovators working together across those 2 countries. We're very similar democracies. We have federations, so we know all the frustrations that come with federations with states and other things. Yeah. We have large NGOs that work on really important issues. Climate change is a huge issue in India, as it is in Australia. Water is a huge issue in India, as it is in Australia. And so it's actually using and harnessing the energy of young people and the work that we do as young people to be able to achieve those things. All
right. Well, let me move on to Uber, because, look, I know we're in the middle of an election campaign, probably a bit unfair to give you a tickle up about Bill Shorten, but one thing I would love to ask you is, given the election campaign that we're in, from a consumer point of view, is the Uber traffic as high as ever? Because, as I was saying, you know, Woolworths is saying, oh no, consumers soft. But are you seeing any change in spending on share rides, that sort of thing?
So I think what's interesting is that the Uber business continues to grow around the world.
Yeah.
Right? And I think what's interesting about that growth around the world is that what we're trying to sort of see is effectively being able to improve the reliability across different cities. We've seen our business in Australia obviously grow, the Uber business and the Uber Eats business grow pretty strongly. We see that as a important factor in our global story about how we think about improving reliability and affordability across cities. We think the most important thing that we can do is, be a genuine partner to cities to improve the transportation across a whole city. Has that meant that we've had a growing number of trips? Yes. Has that meant that we've thought about new innovations? So we've got new innovations such as...
Well, you're constantly innovating, whether it's around Uber Eats or how's the share riding going, and what do you call it?
Pool. So what we see is we actually see that the future of transportation, we sort of see it in sort of 3 big kind of revolutions, and I know that you'll be interested to talk about the third one. But the first one is this concept of moving towards shared rides. The second one is thinking about electric, and then the third one is thinking about automation. Okay. And so we sort of see those things as being able to be the keys to unlocking transportation across cities.
Well, if I was an Uber driver, because at the moment, what is it? Is it 70% of your gross bookings go to drivers? I would think driverless cars would be, you know, if I was an Uber driver, I wouldn't be looking forward to driverless cars.
So there's one thing I'd have to say, and I'll quote our CEO on this, right? Yeah. We think that for the next 5 to 10 years, over the next decade, that we will need more drivers than we have today. Right. Because the way in which the network works and the way in which we can serve cities better is by growing the network and making it more available. Right. Of course, we see driverless cars as being part of that equation. We're a very small percentage of the total transportation needs across the city.
What you do have is the most extraordinary intelligence. I mean, in a way, you're like a Google, aren't you? You've got all these... How many Uber drivers do you have? How many trips are made a year?
So there's about 3 million. There's over 3 million Uber drivers.
You know...
there's over 3 million people that use the platform.
So you know where people are going, the routes they're travelling on, what they're ordering for food. I mean, this must be... And you'll be able to build patterns of people going back through time as well. I mean, what are you doing with all this data? It must be incredibly valuable.
So I think the thing that we want to do is basically be able to use our technology to effectively improve the way in which cities operate. Now, what we do is we also see ourselves working in partnership with cities, and that's something that's been at the core of our new CEO's message since he became CEO over 18 months ago. We have a platform where we share with public policymakers patterns across different cities to help them make different designs across different cities. So we have this platform called Movement that allows policymakers across the world.
And have all cities taken this up?
Some cities have taken it up.
Because you've had different relationships,
and we've had different relationships, and we acknowledge that we need to do more to improve that relationship.
And what about Australian cities?
Well, we've had a very positive relationship with a lot of our cities. We're very pleased that we are regulated across the country, from north to south, east to west.
Yes.
And we also understand that with that brings certain responsibilities. Like if you want to be an important part of the way in which a city functions, you've got certain responsibilities to quit. Now, have we done that? Have we done that well in the past? Perhaps not, but we know that we've got a responsibility going forward.
All right. Well, Amit Singh, very interesting. Love to catch up with you again soon, but thank you very much for joining me here.
Thank you so much.
OK, well, after the break, we'll get an analysis, an analyst perspective on China's Aussie coal ban. Wood Mackenzie's Robin Griffin.
This is Ticky on Your Money, covering the big business stories.
Yes, welcome back. Let's go back to our top story. Treasurer Josh Frydenberg has played down concerns that one of China's major ports has banned imports of Australian coal. As tensions simmer between Beijing and Canberra, overall coal imports for 2019 will be capped through its harbours at 12 million tonnes, but the Treasurer has warned against jumping to conclusions. The move prompted the government to order an urgent investigation by Australia's ambassador in Beijing.
I mean, we're obviously getting these reports verified through our ambassador in Beijing, but what I would say is that, I mean, this has happened before, that at a local level, individual ports have made certain decisions in relation to coal, and that was related to domestic economic and environmental considerations at a particular time, not to the bilateral relationship.
Well, the Australian dollar recovered on the Treasurer's comments after sliding 1% when the news was released late yesterday. DFAT says a number of other companies are having problems with their exports to China. Earlier this week, BHP Chief Executive Andrew Mackenzie said these issues, quote, pertain to China's trade with the whole world. It's not particularly Australian in its nature. I don't believe for 1 minute this is linked to some of the higher-level issues of relations between China and the rest of the world, and including with us, he said. Well, the Trade Minister says there's no evidence the conclusion and potential ban is in retaliation to recent bilateral tensions.
That people, when some of these administrative issues come up, do seek to jump to conclusions sometimes, and I would always urge against that. I think there can often be other administrative reasons, other issues of domestic policy or the like that may be factors as well.
Well, that sentiment by Simon Birmingham, a sentiment that the RBA Governor, Dr Philip Lowe, appeared to agree with when quizzed at a Senate Economics Committee hearing earlier today. What does the market make of all of this then? Well, Robin Griffin is the lead coal analyst at Wood Mackenzie in Australia. I spoke to him from Brisbane. Robin Griffin, I guess everybody wants to ask you the same question today. Now, how much damage is this reported coal ban going to deliver for Australia?
Well, I mean, at this stage, it's very, very difficult to say. I mean, there's a lot of uncertainty about what has actually happened and what it means. I mean, what we do know is that there has been an announcement from the Dalian port, which is a suite of ports in North China. They have banned coal temporarily in order to reduce the quota of coals that are going in through those ports in 2019. At this stage, it looks like that specific announcement relates to about 5 million tonnes of coal. That's out of a trade of about 250 million tonnes. So it's, at this stage at least, a very small share of what is a very large overall trade.
So if I got this right, from reports, we know that there's a ban for a specific time period and there's a go slow as well. Is that right?
Well, there have been some go slows that are slightly broader than just the Dalian port. So since the beginning of this year, there have been customs clearance delays at various ports, mostly in the north, because that's obviously where most of the imports are going into, but also in the south. So I think what's happened is that the combination of these go slows at customs clearance and talk of a ban have created sort of anxiety about a wider, deeper, more strategic move away from Australia, which at the moment there's really no evidence for.
All right, so there seem to be three possible explanations or issues. One is the Chinese concern about climate change. Now the second one is more about domestic, playing to the domestic market. To your knowledge, what is the situation up there with domestic supply and how that competes with imports?
Well, I mean, since 2016, the Chinese government has been reforming various sectors. The mining sector came in line for that reform in 2016. So we've seen a huge amount of capacity removed from China's coal sector, both thermal and metallurgical coal.
Right.
So that is ongoing, and that has really driven the prices to where they are today. We've really benefited in Australia and internationally from China's reforms. As demand falls in China, and I'm not suggesting that has happened, but demand indicators have been relatively weak, there is the chance that the Chinese government will move to help the competitiveness of their local industry. So that may be behind some of these moves, but there are big implications for a China-wide ban, and not just implications for Australia, implications for Chinese industry as well.
Right. Okay. So the other factor could be this push towards cleaner energy and shifting away from coal. What is the chatter in the market about some sort of payback for Australia's banning of Huawei from 5G?
Yeah, well, there's certainly a lot of chatter. I think that the logic behind that argument is really based on deduction, and the deduction being that no other explanation seems to make sense, because there are some implications, as I say, for the Chinese steel sector in particular from not taking Australian coal. So it's a reasonably widely held view that there may be some political motivation or some aspect of this decision, but again, it's pure conjecture.
Right, OK. The other thing that's happened, of course, Robin, at the moment, or this week, is that Glencore has buckled to a different sort of pressure to the Climate Action 100 Plus and has decided to freeze any sort of production increase within its sort of coal mining globally, having just bought a whole lot of coal. What's the market saying about that?
Well, I think it depends who you ask, of course.
Yes.
But I mean, what I would say about that is that Glencore's been growing very rapidly, as you know, in the last 3 years. I mean, its Australian acquisitions have pushed its production, or its annual capacity, to around 90 million tonnes. I mean, it's a huge. There's been some huge growth. And actually, the forecasts that I've been involved in haven't expected a lot of additional growth from Glencore, partly because, you know, given the dominance of Glencore in particularly the high energy thermal coal trade into Japan, there's a lot of pressure not to grow anymore and to and even perhaps to reduce their market share into that trade. So this magnanimous
sort of announcement that they have made actually may suit them down to the ground, and presumably because they are geniuses at cornering certain parts of the market. We know this. Could that play into their thinking as well? Yeah, possibly. I mean, you know, the cynical commentators might say that it's actually a very good ploy in terms of their position in particularly the high energy thermal market, because it may actually restrict competitors from growing by increasing pressure on governments and companies to act on climate change. So you know, that is a possibility, I guess. I mean, I think you know, irrespective of what's driving them, the fact that they have talked about climate change and acknowledged its existence does add to the pressure that we're seeing from some of the other decisions and other decisions in courts, for instance, in New South Wales. Wow, that was the Rocky Hill one. That was an extraordinary decision, wasn't it? Again, what is the market saying about that?
Well, I think, I mean, certainly from the supplier's perspective, they're hoping that it doesn't set a huge precedent.
My word.
Because that particular asset, you know, had other problems. I mean, it had already been rejected by the, you know, the Planning Commission in New South Wales. So there is I guess, a hope, perhaps an opinion amongst other coal miners that an appeal on the basis of climate change alone would not be successful.
Right.
But obviously, it's going to give some succor to community groups that have seen a successful appeal.
Robin, Griffin, so interesting to talk. I mean, a lot of movement in the coal sector at the moment, so really appreciate your insights. Thanks very much.
No, you're welcome. Thank you.
Now, one of the organisations that can take credit for moving Glencore on coal is First State Super, the profit for member fund that began life as an industry fund for the public sector and health sector, is one of the Climate Action 100 Plus group. agitating resource businesses to do more on emissions. Now, Deanne Stewart is the new CEO of First State Super, taking over from Michael Dwyer, who I think was much loved in the industry super sector. In a way, she's come from the other side as a former CEO of MetLife Australia, and having worked at BT, Merrill Lynch in New York and McKinsey, she's hitting the ground running, and as you'll see, she has a refreshing response to all this talk on trust and corporate governance. Deanne Stewart, congratulations on your new role. Now, you've had a very varied background, of course, but you say one of the key reasons for wanting to join First State Super was this shift around, change in thinking about governance issues.
Absolutely. Thank you, Ticky. Great to be here. Look, there are many reasons why I joined First State Super, but one of them was actually I really recognise that what's happening in the Australian economy, and actually more globally, you are absolutely seeing some powerful, large super funds being able to have an opportunity to be a real force for good in the way that they invest, the way that governance is struck, and the way that, quite frankly, corporations can act.
Because they have been a force, some funds, not necessarily for good in the past.
Well, there's a balance to be struck, right? And I think certainly what you've seen amongst institutional investors at time is a focus on short-term returns, and we see the impact that that has also had on corporations. But I think some of the larger funds, like First State Super, I think genuinely want to be and are responsible owners. And so things like ESG, good governance, the impact that you're having on the environment, on the community, are at the forefront, together balanced with what provides good, strong, long-term returns for members. And because you can be long-term focused, because that's what superannuation is, it enables that balance to be struck well.
Deanne, you're replacing Michael Dwyer, who had a great reputation for integrity, I think. You talk about ESG, and I know First State Super led the way in things like moving out of tobacco investment. You're now part of this Climate 100 Plus. Now, what got you into that?
So First State Super is one of the key members of Climate Action 100 Plus, and really what it recognises is that together we can actually create a positive impact on reducing carbon over time. It is hard to do that just as one investor. If you think about if you suddenly in your portfolio stop investing in all resource companies, that obviously does impact members' returns. But if you actually can have a broader group that provides a good framework, which is what Climate Action provides, for companies like Glencore, for example, showing more transparency, reporting on their climate change, and thinking about what actions they are taking to reduce their impact and imprint of carbon over time, then that's exactly the outcome.
So this is an extraordinary thing, getting Glencore to move. I mean, some people have said they've been very clever about this strategically as well, this move. But now 100 Plus is putting pressure on companies like BHP, Origin, Santos, you say. Just who is behind 100 Plus?
So there's a number of organisations like First State Super right across the globe, actually.
And Aussie Super I saw in there too.
Australian Super is in there, Cbus and a number of others. First State Super is certainly one of the leaders of it. It began off the back of the Paris climate change, and a group of investors institutionally said, well, we want to come together and actually be a force for good, but it's better to do that together than trying to do that separately. So that's sort of how it was created.
I must ask you about Hayne, because you've worked in many parts of the sector. What sort of impact do you think the Royal Commission will have now? Look,
I think it will have a lasting impact and an impact for good. And I believe that net, the Royal Commission has been a very positive for our industry, because ultimately it isn't just about what one organisation has done or hasn't done, although he did focus on case studies. It's actually what the industry has done in terms of the standards that they've set and their lack of understanding of community expectations. And I think he has made it very clear and put boards and senior management like myself on notice to say, ultimately, you set the tone, you set the standards, not just follow the law, but set the standards. And I think that he has essentially made that clear. And so as an industry, I think it's a positive thing and it's an opportunity to really lift those standards.
I think you really belled the cat today at CEDA when you talked about this idea of boards talking the talk and not walking the walk. You used this word congruence.
Yeah. Look, I think that has been one of the issues. You've actually seen people stand up on the stand and say, well, look, you know, our culture says this, our values say this. There is not one organisation that doesn't say that they're member first or customer first or that they're one team. But you just get 2 layers below the organisation and you see that completely unravel. And so there's a real responsibility for boards to ensure, and senior management, congruence right throughout the organisation.
How do they do that?
There's many different ways. I think, quite frankly, part of it does start with diversity and making sure that there's a diverse group on your board and senior management that actually reflect community expectations.
So we're not talking gender, just gender
Not
here.
just gender. We're talking age, we're talking cultural, we're talking about where you come from the community. That just is not reflected in many boards here today in Australia. So it starts there, but also secondly, do you really understand up and down the organisation the voice of the customer? And I don't just mean an NPS score or a customer sat. I mean, what are customers saying? What are customers' problems? Do you have visibility of incidents? Do you have visibility of complaints? What are you doing about them? What's the time you're being able to rectify them? And really care about that.
And you think boards should be putting in systems that can effectively measure this?
Absolutely, but it can't just stop at measurement, because you know, good management and good policy are one side, but I think also living the talk and walking the talk is so crucial, and that really is down to the leaders of the organisation. They have such a ripple effect on the organisation, and it's the hard decisions that they make that everyone in the organisation's watching.
And how important do you think Haynes' recommendation about trustees having to put member first with civil penalties attached is?
I am a huge supporter of that. I think at the end of the day it's putting trustees on notice and saying your first and foremost duty is the best interest of the member. So I am a great supporter of that.
Very interesting question from the audience today, which was, look, there are any number of social issues knocking around. At what point should a board and management decide to take up a particular issue alongside their duties either to the member or to their shareholders?
As I mentioned, it's a really sensitive topic because you can get it horribly wrong. And the way that I've used it to guide me is the organisation and are you clear about your purpose? Because your purpose does guide you, or it should guide you if it's not something that's just sitting on a piece of paper. But also secondly, are you clear of the members or your customers and the community that you represent and what's important to them? Then I think in today's day and age you are expected to have a view and really lead that conversation.
So, for example, Alan Joyce at Qantas on gender and on environment.
Yes. Well, if you think about who he represents and what Qantas represents, you know, that's true right across Australia in terms of, you know, that inclusive nature of who Qantas is.
So what about wages and slow wages growth? At what point do we get an organisation like 100 Plus maybe pushing and pressuring higher wages when you know, boards may also have commitments? It could be at the expense of other investments. I mean, they might be quite scared about this.
Yeah. Look, this is my first time where I've worked with an equal representation board, and I've got to say the union representatives on the board, because they're so in tune with the everyday Australian, the value that they bring to the board is actually quite remarkable, and they're asking questions. Every time something comes up at the board, they're saying, well, is this in the interest of our workers? And so actually they do bring that to the fore. What I have observed is they don't necessarily get involved in the detail of things like wages growth. They know that they're there as a board member and their role is governance, not necessarily to take one specific...
Because it's a double-edged sword, isn't it? And if you throw wages up at a company, it may or may not be sustainable.
Correct, but what they do care about is that you're treating people with respect and dignity, and even when you have to make hard decisions, that actually there's the respect and care there, and they're very good from that perspective.
Deanne Stewart, great to have my first talk with you, and I hope you enjoy your time as CEO.
Thank you, Ticky.
Very interesting lady there, I think. After the break, we'll get across a deluge of results this week with my Friday Markets panel, Michael McCarthy from CMC Markets and Matt Kidman from Centennial Asset Management.
Now, back to Ticky.
Well, what a week for the market. A deluge of company reports, coal shipments banned in China, and as we've just heard, a bumper jobs result. So here to unpack all my Friday market panellists, Michael McCarthy from CMC Markets, Matthew Kidman from Centennial Asset Management. Now, fellas, welcome. Would you like to kick off with the most amazing thing of the week? Anybody got something very big to say?
Haven't had time to unpack it, Ticky, but I think that the potential deterioration in China trade relationships is one of the keys.
You do think that's the market's pretty worried about that?
Well, citing environmental factors as a reason to slow down these coal imports is a little hard to swallow. The reality is...
So you think it might be a Huawei thing?
I absolutely think it is, and I think the Chinese authorities have misunderstood the way the Australian economy works.
Yes, right.
There's been a few comments previously about coal and bans and whatnot. This seems to be a lot more serious. But I think it's signalling. They've started off with individual ports, and I don't know where it ends, but the people on the ground actually need the product, and they tend to find a way to get it.
What are we saying here? What do the Chinese want? Are we going to do a sort of Donald Trump Mexican standoff sort of thing? Mixing my metaphors here, obviously. But or are we going to... Because we're not going to walk back on our Huawei decision, are we?
No.
So what's going to happen? How's this going to play out?
They're asking us to play nicely in the future.
So they've accepted the Huawei decision, and this is just a wrap over the knuckles for it, but that'll end and will go on nicely. Is that what we're thinking?
Well, that's certainly what I hope will happen, Ticky. I don't pretend to know the minds of the Chinese authorities, but I think that's what it looks like to me at the moment. And this will recede.
OK. A few backflips around the place. Mortgage brokers, the Labour Party. I noticed that Mortgage Choice is roaring back up again, Matt.
Yeah. Well, it kind of made sense. What the Hone report said was a bit strange. It was what Westpac and Commonwealth Bank had pushed hard for because it suits them. But what mortgage broking has done, it has allowed competition to come into the market. So if you're a bank in Queensland or in Tasmania or a building society, you're able to sell into the big markets in New South Wales and Victoria. That's competition. And by taking away basically the way mortgage brokers make their money by just getting the user to pay you and me rather than the bank, probably disables their business model. And so that can't be the case. Now, what they end up on, whether they just end up with an upfront, that would hurt the banks. The banks will see their mortgages being churned, like it does in the UK. So the banks are in a funny situation now. They've lobbied to get rid of them, effectively. Now we might have this halfway house which might impact the banks. So, but I think the broking...
But we're not seeing that in the market at the moment, are we, as far as that? Are we, Michael? No. No,
I think the mortgage brokers will find... They've got some time as well, remember, there's a couple of years. There's no way they're going to change the model completely because there have been great benefits from brokers coming into the market.
OK,
I'm not sure where it lands, though.
Talk about some big corporate results for the week. Qantas, Michael.
Well, is it at peak earnings? That's the key question.
Can't possibly be, because they're 100 next year, and they've got to be brilliant next year.
What if oil prices go up? Because that's where the big hit was this half, and the big fall in profitability came because of those increased fuel costs. Now, oil prices have come off from those highs for West Texas above 70 to currently around 56, having dropped below 50. But in my view, they're heading higher again. Now, Qantas didn't say much about their hedging strategy. Traditionally, they've hedged about 70% of their oil exposure and their currency exposure.
Aren't they hedged through next year? They are.
Well, generally speaking, they hedge, but they have hedged out to 3 years in the past. So I suspect that they might be a little light on hedges, and therefore rising oil prices might be what brings Qantas lower.
Yeah, Matt?
Yeah, oil's an interesting one. They probably get a benefit because the oil prices come back from where they pay, you know. So the hedging rolls forward.
Higher,
like,
well, Christmas.
Virgin had no issue with oil virtually because they're hedged out.
Yes.
What is good, the domestic market's really good. Virgin and themselves have taken capacity out, and their yield is incredibly good.
Yes.
And demand hasn't come off. So, and then the international is where the oil components come in.
Do you think they're going to get Alliance?
They're going to...
They get the Alliance airline. They've got... remember, they were sort of going to take...
No, I don't think so. I think it's just a blocking state because it came up. But I kind of... Depends where oil goes. Do I think it's peak market? No, I don't, because the consumer's supposed to be under pressure, and domestically it's pretty strong. The results from a demand point of view have been quite good.
All right. Supermarkets, we've had Woolworths and Coles. Michael, I want to...
Woolworths slipping, clearly losing market share. That 2.3% growth in food sales is not good enough, and the fall in Dan Murphy sales of around 6% is very concerning.
That was extraordinary, because that was like a Bunnings, wasn't it, really?
They seem to have real... and now with such a good spread of stores, they've got little opportunity to expand geographically. They're going to have to go to their range and look for organic expansion by more tailoring. That's a more expensive way to get more margin. The growth story here is not looking good for Woolworths.
So Woolworths versus Coles, or should we no longer be thinking like this?
Over the years, it was Coles who had the revival, Woolworths struggled, then it reversed, and it's been this tit for tat, whoever's on top of their game and whoever spent the money on their stores. They kind of be both in a similar situation, because Coles' result was...
but Coles have those sticky thingies now.
Yeah, and all that does is discount, bring them in, and then they go out. There's no loyalty in that. It's one of the worst kind of short-term kicks. All it meant was people were easily transferred, or there's a group of them that are easily transferred and they go back. It seems strange they're both going to have to work on their businesses now, because Coles' result I thought was even worse. And they've just been spun out. They were the handbrake on West Farmers. And
Rob Scott was pointing out, look, we still own, what was it, 13, 15%?
But they told everyone how much they invested, and they didn't invest enough. And they've got some... So it's interesting. They're both going to be tit for tat. I think it might be just a bit of a battle, and you'll find that sales might leak here and there everywhere else as well into alternate avenues, whether it be stuff like Amazon in the future, whether it be the independents, whether it be Aldi still. I don't think either of them can grow a lot, because they're going to have to fight hard.
One line, BHP. Great, yeah. Worked well for you.
Yeah, good numbers. Revenue was a miss, but all temporary. It'll come back.
All right, we've got to go. Gentlemen, thank you so much for joining us. Look, that's all for the show tonight. See you on Monday. We'll have BlueScope Steel CEO Mark Vassella. Thanks for your company.